Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is July 5th, 2024. S&P sitting at 55.45, another all-time high for this year. Today, I am joined once again by one of our extraordinary analysts, Kevin Ferrari, who is on the podcast last week together. In fact, we've been doing quite a few podcasts together.
Yeah, seems like quite a few lately.
And I'm going to be honest, Kevin, not a lot has changed in the last, we've done like three of the last four podcasts together, probably.
Yeah, something like that. 3 of the last 4 or 5.
And they have not been the most exciting. Mm-hmm. Now, I don't think because of you or I, but I mean, just those same 2023 vibes that we talked about last week continue to play out.
Yeah, it's like kind of having flashbacks to like the whole 4180 period where
oh my gosh,
I was on a couple times in a row and literally nothing was going on.
That took forever.
Mm-hmm. It's got the same vibes, just where at least we're covering ground, I guess, right?
We are, yeah. And it was a light week. Obviously, happy 4th of July yesterday. Hope everyone was able to spend some time celebrating the independence of our country from those red, but a light week. And as we were saying, so for the week, as of right now, we've got the NASDAQ up over 3% and our black sheep of the family, Russell, down like over 1% on the week.
Yeah, Uncle Russell just can't get it together.
And we've got strong weeks from the usual suspect. I think all the big mega caps actually Wednesday and today hitting more all-time highs. Apple, Microsoft, Google, Amazon. I'm pretty sure Meta's there. Netflix. So, yeah, you put XLC on there.
Yep, all-time highs.
Nothing. I mean, yeah, those are your fangs. Whether the N is Netflix or, in fact, Nvidia. No new all-time highs from Nvidia this week. It's probably earned itself
a little bit of a break.
Yeah. So I don't want to read into that too much because semiconductors as a whole still look fine. Yeah, it is. And we've got, it's the same thing. And you've got Tesla, right?
Yeah, Tesla, really big week.
Tesla having a big week. Gosh, if that shows back up to the party, then...
Yeah, it was maybe discretionary, kind of start climbing out of the basement a little bit, which is kind of wild to think after like a 25% positive week that Tesla is essentially now finally just back to, basically flat on the year.
Like what's that? If you lose 20%, it takes 25% gain to get back to even. Yeah. So, and Tesla kind of breaking a rate of trend here. That would really be something. I don't know. Is Tesla considered a mega cap? What do you have to be? Do you have to be in $1 trillion to be a mega cap?
That's a good question. I always get those tiers a little mixed up.
Well, and the tiers need to be, we've talked about this a few times, but the tiers need to
be
updated
a little bit now.
Updated after the last 14, 15-year bull market we've been in.
So at least just what I looked up on Investopedia quick, it has to be above $200 billion.
To be a mega cap?
Yeah, which seems low.
Feels a little, I guess if you look at the MGC, the mega cap ETF, I guess it's got some.
Those tiers really all.
Even what's a trillion? And we need to think of something.
It's like an ultra mega cap.
ultra deluxe,
Yep.
mega. But yeah, that's it. And we've got new relative lows this week from you name it: staples, real estate, healthcare, materials, industrials.
Utilities.
Lord have mercy, industrials.
Yeah, that relative chart looks really rough.
The relative chart again, like we were talking about last week. I mean, big picture when you look at XLI, it's a healthy consolidation, but if you don't go up every day, you get crushed on a relative basis. XLE and XLF, they're close to new relative lows. I mean, I don't think XLF, I put it in the XLI category, financials with industrials of
Right.
we're consolidating in a healthy manner at previous all-time highs. But yeah, when NASDAQ's up 0.5% every single day,
Yeah, you just get left behind. And that's
and then
really the only thing in financials that's kind of keeping pace. And really, it's like your blockchain, like next gen economy stuff.
The techie side
Crypto,
of financials.
Right? Yeah, fintech, and that's really about it.
And you've got, we've talked about breadth. I know something Dave likes is the bullish percent on the point and figure chart. And we got another box lower this week. So, regarding that metric, a year-to-date low in bullish participation. And yet, we're hitting like I don't know how many all-time highs we've had this year, but it's been a lot, and we're hitting another one today. Tis the hand. Tis the hand you were dealt at the poker table.
Yep. And those sectors they mentioned, right, there where we're kind of consolidating, like industrials, healthcare, financials. I mean, that's top 3 sectors in IWM, for the Russell. So, I mean, until those sectors really kind of start participating, Russell's kind of dead in the water.
I was even looking, or it was Wednesday. We were obviously off yesterday. But so Russell has not had 3 green days in a row since mid-May. This thing
crazy to think about.
And it has it has these big days, but it just cannot put a trend together and those 3 days, March 15th, those were the year-to-date highs. And since then, impossible to put back, 3 straight. We've had a couple instances of back-to-back green days, and I would even say those weren't the most convincing. But hey, you don't have to own it, right?
Right.
Don't have to own it. You can just go and own this NASDAQ thing that carries.
And I know I feel like a couple times since when I'm on here, I usually bring this up too, but like from a sector rotation perspective, like in the early stages and kind of mid stages of your bull market, like we're seeing now, technology and communication services really is kind of the expected leaders, which is exactly what we're seeing, right?
It is. They are the expected leaders. Are you looking at one of those like cycle things?
Yep. Yeah, I know. I always like using the one that Stock Charts has.
Is that like where it looks like the waves?
Mm-hmm.
Yeah.
Yep, it's got all the sectors on top. And that's the thing, kind of your sectors now that are consolidating the most are really kind of the next ones on the list other than financials, basically like energy, industrials, materials. I guess we saw a little bit of flashes, but kind of cooled off. So yeah, we'll see. And like seasonality, like we've talked about too, right? Like generally this should be more of a kind of flatter period in summer as you move into the end of the year.
Yeah.
Which I guess for the broader market, right, it's kind of the way it's been going for the most part.
Kind of figure out who the candidate, obviously if we don't have an incumbent, but the political cycle seasonality, always a big one. I feel like it's a big one every year. Everyone dices it up. First year of a new president, or midterm election cycle, or election year with an incumbent, election year with no incumbent. But yeah, I would say kind of somewhat bucking the trend. Now is the market pricing in that we're not going to have an incumbent in November? I have no idea.
Yeah, it's hard to say, right? Because then it's kind of the flip side of that. When you look at some of those composites, on the end of the year usually looks actually a little slower. So
Well,
hard
and
to
I don't
say.
think there was any. I mean, even coming into the year, I don't think there was any big mystery about who was going to be there on the November ballot. I
Mm-mm.
know, obviously Republicans, they have to technically do the whole let's officially have a primary thing, but I think everyone's known since 2020 who is going to win that primary in 2024.
Right.
So maybe it gets treated as, I don't know, two incumbents almost. I guess one technically can't be an incumbent, but we've known for 4 years we were getting a rematch. So,
Right.
what about bonds? Bonds or anything? Are we ever going to buy? Are clients ever going to own bonds again, other than like 1 to 3 month treasuries?
I'll say I would assume yes, but it still looks like it's going to be a while. I mean,
Yes,
up this
still
week, but just still kind of more intermediate, big picture, just kind of chopping around.
trying to bottom. Same place we were at October 2020 when equities bottomed. I think, yeah, October 2022. So exactly flat since then. Now, obviously, I've moved in a straight line, but
Actually, just with like kind of the run tech's been on lately, I'm kind of surprised that like out of like your convertible bond funds really aren't doing a little bit better. I know that's one that they generally, at least more recently, seem to kind of move in tandem. But I guess now, obviously, a little different with like a rising rate environment.
yeah,
Maybe that's not going to be the case. But I mean, obviously, relative to like AGG or like treasuries, still doing better. But on an absolute basis, really just kind of hanging out, really not going much anywhere.
we see that. Are you looking at ICVT?
Yep, for sure. So I guess
Yeah,
even there, you're not really seeing much from that, kind of side of the bond universe.
yeah, and same. I mean, junk bonds haven't moved
Mm-mm.
for. I guess total return they look better. I mean, total return. I guess they're at all time highs, which hey,
It's not risk off, right?
it's not. I mean, and you look at like the J and K versus AGG. It's not the worst. Definitely, probably diverged a little bit from equity markets since late April, but
Yeah, broad bond's still pretty dull. But I guess really maybe something that's a little different from kind of the last week or two. Commodities kind of picked up the pace a little bit this week. If you use
yeah, is
something
that
like
it's so like it wasn't just like an oil thing? It's been pretty
uh,
broad. I mean, dollar got hit this week,
right.
so that I can, yeah, I mean, probably a nice little tailwind from that.
I mean, definitely like energies and kind of more of like I guess your metals. Like copper's had a pretty good week this week.
Yeah, I mean, highest crude
Um,
prices since mid-April.
Crude, gas, things like that, even like heating oil, pretty well. Which is like if you use something like GCC, that's pretty tilted pretty heavily to like energy and industrial and precious metals, which kind of makes sense there. Grains have still been pretty rough.
Yeah, corn still hanging out
Mhm.
low down there.
Right.
Orange juice, cattle up. Lumber
Yeah,
still
so
is lumber
Softs,
sucks, which I mean,
softs have been pretty flat for the most part, outside of like, maybe a little bit sugar. I guess maybe over the last couple weeks, not so much this week. But at least a little bit of movement there outside of the grain.
rice is always such a. I mean, some of these, whether you use the contract adjustment or not, can because part of me, I look at rice and I say, okay, that looks horrible. If I use adjusted, I say, okay, that's actually like a pretty decent uptrend. Choppy, but I mean, it's an uptrend.
Yeah, and soybean oils really kind of surged back here in the last couple weeks. Really, this week for the most part, it's kind of most of the gains there.
Yeah, look at that. Thank God I was overweight soybean oil.
Right.
Don't have a K1 free ETF for soybean oil.
No,
Sorry.
I guess I haven't really paid attention too much to like weather outside of basically here locally in Wisconsin. But I know we've been getting pounded with rain.
Is that good?
Um,
That's probably good. I mean,
I,
obviously, I'm sure it's like a fine line. You don't want too much rain.
well, yeah, like we're talking like flooding fields,
Uh,
with like standing
too much.
waters. I mean, yeah, and it's more rain last night, pretty heavy. Going to be more today. I think more next week too. So, fields that are already flooded out are just getting worse. So at least here locally, it's looking kind of rough on that end. But really, kind of the rest of the grain belt, I guess I'm really not sure how that looks. I guess you're not really seeing that necessarily reflected in price now.
What do they mainly grow out by you? Corn?
Yeah, corn and soybeans are kind of the big two. I guess wheat would be the next one.
Do the soybeans all get shipped off somewhere like international? Do we eat a lot of soybeans in this country? Am I just not aware of it?
I mean, it more of, I think, is, ingredient for soy, like in some things. I guess I don't know what all uses it.
According to Google, China consumes the most soybean meal, followed by the U.S. So
There you go.
we got so many of these soy boys out here, Kevin.
Yep. Well, corn going into ethanol. I know we got quite a few ethanol plants, at least locally around here. So I'm sure a lot of that might stay in state for that, but who knows? So yeah, that'll be interesting to see. I guess if it might have to peek into that a little bit more if it's just as wet, kind of a little bit south of here. Maybe some of those expected harvest figures will kind of tail off. Maybe you'll see that reflected in price. Dan would be the one that would know more about that. He's got the commodities background.
But you're out there in the thick of it. You're out there in farm country. What about gold? Gold and silver doing anything?
Yeah, the miners are kind of trying to claw back a little bit, at least for like gold and copper. Silver not as much.
And gold is making like 1 month highs today. Mm-hmm. So props to that. Still in the same range between 2,300 and 2,450 an ounce, 2,460. I mean, it's healthy.
Right.
But again, like everything else we've talked about, it's gone sideways for 2 months. NASDAQ's up. I mean, God knows how much in those 2 months. So that means the S&P's up, which means, again, if you don't, NASDAQ's up since gold started consolidating in mid-April. NASDAQ's up 15%. That will ruin a relative chart.
Oh, yeah.
So, still tough to own. Yeah, it looks great. Still a tough one. You got a flat relative 200-day. Just a messy relative chart. Silver, a little bit better.
Yeah, and I think steel we talked about last week, getting hit kind of hard today. Other than that, it was having a decent week. Not too bad. But really kind of, not a whole lot necessarily going on in the material space. Copper miners kind of fought back here over the last couple of days, kind of running into an area where you just expect resistance, where you've kind of seen it before. So I guess we'll see what they do with it. Once you get closer to like 49.50 up here.
I can't believe this is true. Over the last 5 years, 6 years, what do you think is up more, silver or the S&P? Guess I probably gave it away with that way I asked that.
I was going to say, would have guessed the S&P until you asked it that way.
They're both up. Well, so they're both in line.
Really?
Both up 104%. Wouldn't have
over
guessed
the last 5 years, you said?
Last 6.
Oh, 6 years.
5 to 6, yeah. Both, actually.
Yeah, I wouldn't have guessed that.
And that's why you play the game.
True.
Bitcoin getting thumped on our day off yesterday. Bitcoin down to...
Yeah, that's not a good look.
No, it's not.
Kind of that range.
Technicians figure this would turn out, and maybe it's a failed breakdown. I don't know. But not the way I thought that this consolidation would break. Makes me wonder if industrials or financials will break down too.
Mm-hmm.
Out of their consolidations. Below a 200-day, and it's an upward sloping 200-day, so if it'll break down wouldn't be the most surprising thing. But yeah, first time below a 200-day since mid-October. It's been a while. Still in an uptrend, but...
Yeah, still kind of that situation where the miners are just kind of hanging in there a little bit better than, the coins themselves. But, even the miners here really are just kind of consolidating, chopping around.
Yeah, miners are continuing to outperform. We're seeing that in gold a little bit. Interesting. Anything else super pertinent, Kevin, that you just absolutely need our listeners to know?
I don't think so. I think that's about all I got.
Boring story time.
Yep, same old story.
We're making money, but
just not the most exciting fashion.
Nothing cool is going on. Which I guess, hey, there are worse environments to be in.
Right, I guess if you're doing the whole trend following thing correctly, it really shouldn't be all that exciting.
Yeah, right? And if you've participated in market environments for a few years or a long time, boring and up, Even with low breadth, I will take that.
For sure. Yeah, it's better on the flip side. Flip
Much
side of that
better.
coin. Right.
All right, Kevin. Well, that's it for our listeners this week, and wish you a happy weekend.
Yeah. If you're shooting off some fireworks this weekend, like I plan on doing it, hopefully you still have all 10 digits when you come back to work on Monday.
Yes, keep those trading fingers
Exactly.
connected for us, Kevin.
That's the plan. Give it a shot.
All right, you all have a great weekend.
Yep, have a good weekend.